Welcome, ladies and gentlemen, and thank you very much for being here now for this distinguished panel. I hope everybody can hear us. It's quite noisy here around, but yeah, is it okay? Okay, great. So everybody knows the Bitcoin ecosystem, the blockchain ecosystem that hasn't been really driven by institutions. That there are a lot of private activities, and therefore we are now quite curious how is the institutional adoption around digital assets going on. And we have really a number of highly knowledgeable people here on the panel. And please, Wilfred, start introducing yourself.
Hi, how are you doing, everyone? My name is Wilfred Daye. I am the CEO for Samara Alpha Management. We are a hedge fund fund business. We also do a separate managed account as well as seed managers in the space, being around in the space for 8 years. Prior to the digital asset space, I was with Dornseifer, UBS, Lehman Brothers in traditional finance, in credit trading, about 17 years. So great to be here. Great to be part of the panel here.
Colla, please go on.
Hi, I'm Colla. I work at Seeds Group. On the bank side, we are a family-run private bank based in Switzerland. We've been active in crypto markets since 2022 when we started offering trading and custody at the bank. We also have a sister company that runs various fund of hedge funds in the crypto space, denominated both in dollars and crypto. And I'm very excited to be talking about asset allocation for private wealth management in digital asset space.
Thank you very much. Maurice.
Hi, everybody. My name is Maurice Mureau. I'm leading a digital asset fund manager out of Rotterdam. We were founded in 2022. We have funds in the Netherlands as well as in Gibraltar, and we run different strategies all in digital assets, market delta neutral, directional, and VC. And yeah, we're looking forward to this discussion and see if the institutions are finally coming and allocate to our funds.
Yeah, and Shyan.
Hello everyone. I'm Shyan Hussain. I'm the CEO and founder of BlockBytes Capital. We are an asset management firm specializing in the crypto space based out of America. I personally have been involved in the space for several years, and as many of you, I started in the trenches, and now it's nice to see the institutions coming after our tokens. So yeah, delighted to be here and look forward to speaking to all of you.
Okay, and last but not least, Haymond.
Started from the bottom, now you're here. Hello, everyone. I'm Haymond Rankin. I am an associate director at Cayman Finance. Cayman Finance is a nonprofit organization that represents the interests of the entire financial services industry in the Cayman Islands, as well as the government's interests. So, you know, all the big four accountancy firms, all the Magic Circle law firms, directorship shops, you know, these are all clients of ours. You know, you could literally close your eyes, throw a dart on a wall, hit a name of a company on the top 100 in CMC. Chances are they're also one of our clients or one of our clients' clients. In addition to what we do locally, bridging the gap between the private and public sector, we also act as a liaison on the international scene to help bring contacts into the Cayman Islands, to help connect you to the government or to our service providers that we look after. So if anyone's looking for links to the Cayman Islands, I'm your guy, and I'm looking forward to this conversation as well.
Oh, okay, thank you very much. So a few words to my person. I'm the managing director of the German Alternative Investment Association. We represent more than 300 members from private equity, infrastructure, private debt, and the hedge fund business. And we have a huge German institutional investor network. And I will come back later to the point of asset allocation of German institutional investors and crypto and digital assets. But now let's go to Haymond again, and from your role as your Cayman Finance, how do you look on institutional adoption of digital assets?
The way I look at digital assets, you know, I've been in the space since 2016, and what I would say is, for me personally, I think the one word that you can use to describe where the industry is at right now is maturity. I think we're moving out of the stage of crypto bros and hoodies and, you know, Converse into a phase where, you know, people are wearing jackets and shirts, and we're trying to really move into an institutional realm. So what does that look like? You know, I think we're seeing a lot of people moving away from spot trading more into digital assets, right? For me, you know, people say, well, you still do crypto, bro? It's like, well, no, not really, because that has a connotation of trading. And that's not really, you know, at this phase in, as we say, in our lives, now that we've made it, we're not in that phase of trading crypto anymore. It's more so digital assets. So what is that, right? It's tokenized funds, it's real world assets, you know, it's digital asset treasuries. We're seeing a lot more activity in this space. As I've traveled, I'm hearing about a lot of that worldwide. Was at Token in Korea last couple weeks ago. But locally in Cayman, we're hearing a lot of the same things, because these people internationally are reaching out locally to get a lot of these structures set up in the Cayman Islands.
Okay, thank you very much. So as I always prefer to have interactive panels. One question to the audience. Who is here an institutional allocator? Who is a private allocator? Okay, that's quite interesting, but nevertheless get involved in the discussion. You are always feel free to ask questions to us. But going back here to the panelists and the institutional adoption. Shyan, what is your view? Where are we in the cycle of the institutional adoption with regard to digital assets?
So yeah, I think Haymond said it pretty clearly and very well, is that we are currently seeing a huge transition, and that transition has only just started taking place maybe 18 to 20 months back. And there are a variety of factors that have contributed to this happening. And of course, I feel there is both positives and negatives for institutional capital flowing into the space. Of course, overall, it is positive to get the space into a more mature state, having the asset class, quote unquote, being more legitimate in the eyes of new investors and potential new institutional investors. And it's been a rough road, definitely, over, especially if you've been in the market over the last 2 years. I think the dynamic really started to change when America declared itself as wanting to become the crypto capital of the world. And I think that really started to open a lot of eyes, and we're looking forward to what's to come in the future.
Okay, thank you very much, Maurice. So, what are the ways or the products and structures to access digital assets from an institutional perspective?
I think, and this really goes with the story Sean explained as well. You see that the institutions are more looking at things they know. So they look at strategies they already know in TradFi. So they're not really looking for a directional exposure only, but also to how can I profit from digital assets with, for example, a market delta neutral strategy or a VC strategy. So more things they can explain to their investors, but also to their own board, which is kind of familiar with what they did before. I mean, I think this is my 4th or 5th appearance on the stage, and each year it's kind of the same. The institutions are coming. We expect them to come, but I think finally this year we can say they actually arrived. I think the ETFs, which also is a traditional finance product, kind of helped them open their eyes and see that there's actually a big demand. And what Sean said, what we now need is also clear regulation to be able to serve the institutions in a way they are used to in the traditional finance with the products they do. And I think there's a lot to come. Tokenization, one of them.
Yeah. Okay, we'll dig deeper a little bit later on. As I said, so our association, we have a huge investor network in Germany, and we recently have undertaken our annual investor survey among more than 110 institutional investors. And when I talk about institutional investors, I mean insurance companies, pension fund, occupational pension schemes, family offices, and so on. And we look at the alternative asset classes in the institutional portfolio. And this year, we had in the average an allocation to crypto of 0.5%. Insurance companies, pension funds, 0. So there are only the family offices who have a really minor exposure so far. Colla, is this a surprise for you, these numbers, or what do you see in Switzerland especially?
No, I'm not surprised at all. I think we've been talking about institutionalization of crypto for a number of years. I think we're all very hasty. We all want to get there. On the panel before, we were talking about all that capital that hasn't been deployed. I think we're at a point today where over the last 18 months, between the arrival of the ETFs, the new US administration, we are now seeing every institutional player thinking about crypto. Most of them are still coming to the conclusion that no, they don't want an allocation. So they are still at 0, and I'm not surprised by that. But they are talking about it. Let's not get ahead of ourselves. Remember that, 24 months ago, if you were sitting at a board of a pension fund and you said, I think we should buy Bitcoin, you would have been laughed out of the room. Now, if you go and you say we should buy Bitcoin, they'll probably say, let us work again into the risk model. Let us think about it. Where we're not there yet, but so it's coming. From a private wealth perspective, we see clients come to us every day looking for crypto. There is strong demand. It was mentioned before, especially in relationship to Bitcoin, this association of a store of value, of an alternative to gold, of an alternative to a dollar that could be weakened. I think this starts resonating more and more with individuals and with institutions. We as a private bank are starting to allocate into crypto. We started doing it through hedge funds, and now we're going to do it more directionally. So it starts step by step, but unlike a lot of other asset classes, think about venture capital, private equity, that came from the largest institutional players and trickled all the way down to wealth managers and individual investors. Here we're seeing the reverse. Most people here probably own crypto. So we're having individuals that own crypto. Now we go a bit further, we're starting having these high net worth individuals, these family offices allocating to crypto. And as it starts trickling higher and higher, we're going to see pension funds, insurances, and so on. So I think we're really on the way here, but there's still ways to go before we get to that point.
Oh, okay, thank you very much. And now, Wilfred, can you share your views on the institutional adoption? What are strategies and what are asset classes you can access, and how can you achieve a real benefit in the portfolio by adding digital assets, and how to generate alpha?
Yeah, so I think there are a lot of flavors in digital asset allocation or in the portfolio. So one component is basically treating the beta or directionality of it. So at least in the US, there's a large presence of ETF. So there's the IBIT of the world. There's also equivalent of Ethereum ETF, and there are lever ETFs out there. So a lot of institutions already participate in this type of asset form. So forms do matter. The reason it matters is because a lot of institutions are not familiar with the custodian, crypto custody. In US, there are only few qualified custodians. For institutions to get in, they have to go with someone who's qualified custodian. So having the right form, i.e. the ETF, will help them a lot to get into the liquid asset. That's one component of it. So basically being directional, allocating the capital into forms that are more compliant and tax-friendly. And the second component I see is, obviously, 8 years ago, there were very, very few crypto institutions. There are a lot of more crypto institutions nowadays. They're growing. They grew up over the last 8 years. Now they become institutional, very, very large. They are allocating into the cryptocurrency space, and they're more savvy, right? So they are getting into DeFi. They're getting into market neutral strategies, options trading, and so on and so forth. So those are the alpha players in the marketplace. They're looking for uncorrelated alpha, away from traditional credit products and so on and so forth. So we see a lot more folks getting into DeFi, for instance, over the last 16 months. And then we'll talk about a little bit later today about what happened last Friday, and the sort of the interesting observation that I can tell you today is that that DeFi strategies themselves is on impact in general. So it's a very interesting set of strategies that coming into the cryptocurrency space in the last 16 months. That's unique, even from alpha generation perspective. Yeah.
Anybody wants to comment?
Well, I think it's a good thing. I still think a lot of institutions see digital assets in their alternative investment basket. So if you look at weightings, how much do you allocate to digital assets? It's still very small numbers because it's still part of part of their portfolio, which is probably only 15% normally alternative assets, and their percentage of. So it will take a while before it picks up. But I think definitely, like Colla said as well, people are thinking about it and talking about it, and that's the first step to get there.
Yeah, but yeah, Colla.
I was going to say maybe one comment on you talked about last Friday. We're seeing it.
We come back later to last Friday. I'm currently here with the challenges for institutional adoption. So everybody knows you have to do a token due diligence to have to proper risk management and so on. So from your practitioner view, what are the biggest challenges for the institutional adoption? Who wants to start?
I believe just getting more clarity with regulations, getting a stronger framework, getting those regulations starting to be implemented. For America, especially getting all the tax regulations sorted, especially when we're dealing with the digital asset space. We've had discussions in America now about getting tax reforms, specifically on capital gains tax with the digital asset space. And I think when we start to see some positive reforms over there, then for sure we will start to see a lot more institutional flow coming in, not just to Bitcoin, not just into ETFs, but more for the tokens that were previously only providing theoretical value, but are now also on their way to providing real utility.
Yeah. Haymond, for you here at Financial Center,
Yeah.
what are the most relevant topics to give here also a regulatory frame here for the industry?
Well, just to go back on the question that you just asked, I think one of the key barriers, it's really not performance, right? It's not really performance of the asset. It's all of the processes that you mentioned, right? You have to have that auditor. You need to have key things in place, KYC, AML, all these different things. And to a large extent, I think one of the key benefits of using a jurisdiction like the Cayman Islands is you're operating in a jurisdiction that has high trust, right? Not only does it has high trust because of legal clarity, right, in the laws that we have, and the guidance that is provided by our regulator, which is CIMA, the Cayman Islands Monetary Authority, you also have very seasoned experts in the field that can effectively act as a service provider to conduct a lot of these processes that you mentioned earlier, which in turn has been breaking down a lot of barriers over the past couple of years, so much so to the point now where we have, a lot of hedge funds in the Cayman Islands and globally that are domiciled in the Cayman Islands that have exposure to virtual assets. There was actually a report done by AMA and PwC, who are also members of our network, that looked at the numbers. So they did a survey. And from that survey they looked into how many hedge funds out there had exposure to virtual assets. And I think you said it was 0.01 something in Germany. Can you guess what that number is in the Cayman Islands?
Yeah.
Can anyone guess?
Maurice, you wanted to comment as well? Or?
No, I want to take a guess.
Yeah.
80%.
80? Oh, that's a great guess. No, it's 49%. Right, so nearly 50% of hedge funds are domiciled in the Cayman Islands, and over 67% of them have exposure to digital assets. And this report was done last year, so imagine what it is today, right? So I just wanted to comment on a little bit of those barriers you were mentioning.
And maybe it's of interest for you as well. In Germany, for example, so-called special funds are allowed also to invest into crypto directly, so not via any ETPs, whatever, there is a specific quota for those funds to directly invest in cryptos. We even have crypto hedge funds in Germany, not as many as in Cayman, of course, but just to demonstrate you that things are changing. They are changing slowly, and there is interest there, but it will take a while till that changes. And one thing, and now we come back to Colla.
Just in terms of institutional hurdles, something that I keep saying over and over again, institutionals like to invest passively. You know, they like to invest in an index. They like to have a benchmark. I think we're still in an industry that's looking to figure out what the benchmark is. Is the benchmark Bitcoin? Is it a market cap weighted index? I think that's something where everyone's trying to do their part. You know, there's Hashdex with NASDAQ doing one, there's MSCI doing one, but we still don't have this kind of confidence. If you have a client, whether it's a pension fund or an individual who comes to you and says, Frank, I want to buy the space, I want to buy the ecosystem, what do you buy? How do you allocate that capital? I think for a lot of, again, institutionals not on the fast money, smart money side, who they got onto the rails really well, but for all these kind of slower, passive people, they're really struggling to understand how to allocate that.
Yeah, Colla you just mentioned confidence, and then we step back a few days. So everybody knows there was the big Bitcoin short. There was the biggest liquidation we have seen so far in history, and that was really mixing up markets, at least temporarily, and it seemed also it was mixing up systems, and with regard to the institutional adoption, I think this has been a bad sign, yeah, or maybe it was a good sign. And now, Colla, what do you think? How do you evaluate it? What are the lessons learned?
I'm going to be a bit controversial, but in the big picture, I think it's a good thing. I think that's how the whole space has evolved. We need to go through these events. We need to clean them out. We need to get better. I think there's two issues around what happened. One question is around whether there was some form of insider information to that person who had that massive Bitcoin short. That can be treated in court. That can be figured out. It's independent of the system. That could happen on the stock market. That could happen anywhere. And then on the sell-off, it doesn't really matter about the price. I think the key issue we had is the latency issues at Binance. And that's something that was scary for a lot of market neutral, high frequency traders. But as a whole for the market, it's going to push institutions become better. Binance are going to review what went wrong. When you have, I don't know if you remember a couple of years ago when you had festivals, you'd try to buy a ticket online and this website would crash. They don't crash anymore. That's how you get to progress. So I think in the short term, it creates a little bit of stress, but every one of these events in the end helps build the industry better and stronger. So I think it's going to help institutional adoption over the medium term.
Wilfred, what are your views on that topic?
I think it's fairly healthy. If you go back to history, Coinbase has a flash crash here and there. Exchanges do go down. So bear in mind the cryptocurrency exchanges are not equity exchanges, right? They're not really. There are no circuit break and so on and so forth. There are no consortium or regulators behind them. This is all private markets. So by definition, they are peer-to-peer network. So this is very important to remember and differentiates from the traditional or equity markets. So if you go back to history, back in 2016, 2017, compared to today, it's day and night differences. So we're much better compared to even 2 years ago, right? And then we only see, we saw Binance made a decision themselves, and whereas other crypto exchanges are doing okay, they're relatively okay. So only the problem was the price oracle from Binance. And in the crypto world, there's also, like I mentioned, DeFi, which is unrelated to a certain degree, central exchanges. Those are unimpacted at all, right? So the crypto ecosystem has actually become more healthy through this set of events. People have more emphasis on decentralized finance, Uniswap and other DEXs out there rather than centralized exchanges.
Okay,
Maurice? Well, I think the whole event was really bad for the institutional adoption in a way that it kind of showed that there's a lot of insecurity. I mean, it was a combination of things, probably an insider trading in combination with an exchange that is not regulated, that nobody knows in this audience here where their headquarters is. And that doesn't give a lot of confidence in the space from an institutional perspective, because you want to invest in an environment that you know is regulated, trustworthy, and these things cannot happen. And I agree, we need the shakeout to improve the technology and make sure it cannot happen in the future. But if you were in this boardroom discussing with your compliance team, your risk manager, that you need to allocate into digital assets, and this happens overnight, well, on Monday you probably get a different feedback than if it didn't happen. So I think a regulatory framework is absolutely necessary. Either we stay where crypto began as a sort of within the cyberpunks and let's go against the system and we have our own system and we don't have anything to do with the government, or we embrace the technology which has proven itself and is really, really solid and really, really good, and make sure the environment around us is good enough that the institutions indeed say, okay, yes, we need to, we don't need to allocate. We cannot go around it anymore. It's just part of our business. And I think what happened last week was a bit of a setback in the process.
Okay, thank you. So I would be interested here to look a little bit here in the portfolios here you have, and also what you advise here for clients. And maybe we start with Shyan. How does your portfolio look like, and what does what are the relevant digital assets you are looking at?
So we have a core basket of assets that we accumulate for our clients. Of course, everyone knows about Bitcoin, Ethereum, but we also look at other tokens that are now starting to provide utility, not only via DeFi, but also through real-world asset tokenization. So we like to keep our assets diversified, and we are diversifying in the altcoin market as well. Tokens like AVAX, Solana, of course, Ethereum, Bitcoin, and so on. But yeah, I think there is a lot of opportunity right now for the mid to lower market cap tokens. And once we kind of see the attention deviate away from Bitcoin and into other tokens that are offering utility instead of just being a store of value, is it's always good to be ahead of the herd in that regard.
Okay, and how important is it for an institutional investor to have Bitcoin in the portfolio?
I think that depends on the institution. I personally believe it's very important. And I think over time, more and more institutions will want to gain exposure. But like our colleagues just now said, events like 1010 will cause a hindrance with the overall space. But at the same time, these kinds of events are also needed to show the institutions that are waiting on the sidelines that, yes, we can go through troubles, but it's not like previous years where it's just collapsed and collapsed and collapsed. But we had a mean reversion right back to almost at the levels that we broke down from. So I think kind of seeing that kind of strength and seeing this kind of dominance from Bitcoin over financial markets is definitely going to continue to be important.
Okay, thank you very much. Maurice, how does your portfolio look like, and how or why do we need digital assets for portfolio optimization?
Well, the last part is easy. That's because it correlates differently than all other assets on the long run. In short,
but there is sometimes a problem with volatility.
Yes, but volatility is also an opportunity. So it depends on your strategy. But strategy has changed. When we began, we offered our clients access to the digital asset space. Was in 2020, it wasn't easy and user-friendly to have a whole basket of digital assets, of cryptos, if you will call it. Now we see it tends to go more to the large coins where there's more liquidity, with high conviction bets where there's utility. But again, the strategy makes a lot of difference, because if you are in a market-neutral strategy, there's still a lot to gain in the inefficiencies of the market without having exposure, so you can be involved without the exposure of the direction. And even last Friday showed that you could actually make money with inefficiencies in the market because prices on exchanges differed a lot. We've seen on the spot $5,000 differences between a decentralized exchange and a centralized exchange, which we could play out with our derivatives. So that means that's very interesting. And I think looking at the traditional finance, where it's all kind of the same, it doesn't matter which exchange you are. Yeah, in the digital asset landscape, there's a lot to win and a lot to gain. And the niche players, the early adopters, probably all that are here in the audience and on the stage, know how to benefit from it. And I think the institutions want to have a pick of that. And yeah, I think the worst allocation you can have is no allocation.
Good point. Colla, as you mentioned also wealth management. So what does it means from the wealth management perspective to invest into digital assets, and what are here the ways to invest, and what kind of digital assets do you advise or recommend for clients?
Yeah, so I'll start by echoing what Maurice just said. I think volatility is an opportunity, especially when you're allocating a long-only portfolio. It's free to reduce your allocation to fit your target volatility. So if something is too volatile, you can size it accordingly. If something is not volatile enough, you need to take on leverage to make it match your targets, and that's costly. So we see this as a question of sizing. There is no one shoe fits all. We spend a lot of time understanding our clients' needs, their perspective, their time horizons. Our clients have an inherent bias towards, maybe it's because we're based in Switzerland, but towards Bitcoin because they like this idea of having a digital store of value, an alternative to gold or to other commodities. Once you start going through the rest of the stack, it becomes a technology question. And you mentioned it earlier about how we need to think about due diligencing the ideas behind what is the investment case. So this is something we do on a case-by-case basis. We would typically recommend, let's say, up to 5% allocation within that space for someone that is not natively exposed to it. And that will, as of today, mostly be through Bitcoin, Ethereum, although we definitely feel a lot of push to expand that down to the Solana, the BNBs, and so on. That's also why I was mentioning earlier, for us, where we haven't cracked the question yet, but we're really looking for this, basket, passive solution, what fits us best to advise clients, because there's a difference between taking a conviction on the token and wanting to gain exposure to the space.
Wilfred.
We're a little bit different. We don't really care cryptocurrency fundamentals itself. So we're pure market neutral quantitative strategies. Just give you a little bit more context. So if you're trading long-short equity in the traditional world, you get a 0.7 Sharpe ratio. In cryptocurrency, same strategy, you get 2. So the alpha is quite significant compared to the traditional world. So when we talk to our clients, we think about where the alpha came from. If the alpha is purely uncorrelated, unique alpha from an investor's portfolio, they can take as much as they want, right? So when we started our business, we had US dollar, USD market neutral fund. Then we realized a lot of our clients are interested in Bitcoin economy, so Bitcoin focused fund. So we started probably the world's first Bitcoin-denominated market neutral fund. And that's 100% beta to Bitcoin, obviously, but we add alpha on top of it. So we're generating return on top of Bitcoin itself. So that has been a very successful product in general. So really depends on how the investor think about his or her own portfolio. If there is a debasement trade involved here, so gold and Bitcoin, definitely those are in consideration. We do see a lot of folks are coming to us say, how do we generate more yield on Bitcoin? And most of the Bitcoin holders are long-term holders. They're not tourists in your industry, right? So.
Thank you very much. And of course, I would like to give you, the audience, the opportunity to pose questions. So are there any questions to the panelists? Yeah? I don't know. You have a mic? Yeah. Here, over here, please.
Hi. I'm just curious if the members of the panel see.
No,
We can't hear you. Sorry.
Now,
I am just curious if the members of the panel see a trend for institutional investment to shift in terms of center of gravity more towards Asia and the Middle East and less in Europe. It seems to be a trend that has built up over the past few months and seems to be accelerating. I mean, I'm just curious, because even if I look at the composition of the panel, there's, I would say, 60-40 at this stage. Is Europe losing this game? Do we need to change tack?
Sorry, I didn't get the question entirely, but you were asking the 60-40.
No, he's asking if Europe is losing pace in, correct me if I'm wrong, if we're not in Europe losing pace towards Asia and the US in the context of the US administration and maybe to some way or form MiCA and over-regulation in Europe. I'm extrapolating a bit here. If I can share my point of view, we have spent countless hours with FINMA, the Swiss financial regulator, to be able to do what we're doing. The pain and the level of intensity that it requires for us to offer these services is definitely a hurdle. I think overall, a couple of years ago, Switzerland was very advanced, and we got caught up by everyone else. So I tend to say yes. Unfortunately, I do think we're losing pace. I don't think the race is lost, but we do need significant change for things to flourish more on the European side.
Yeah, and definitely the same in the EU. Definitely the same in the EU. We also lost pace, and I think the only way to get it back is to get clear regulation that is actually also usable. 2 panels ago, there was a whole regulation panel, and they highlighted the difference between, or at least when you have MiCA, but you also have your PSD, your payments, etc. And it's different regulations. It's very difficult for it to innovate within this landscape in Europe. But looking back on what happened last Friday, I think if we can get the regulation in a workable way, we could definitely take something back that we lost to the US over the last years.
I think that's a very interesting question that you asked. And while I can't speak personally on Europe's progress, I can speak about the US and Asia and the Middle East. So in the US, it's been obvious, since President Trump came into office, and that whole dynamic kind of shifted in favor of cryptocurrency adoption and tokenization of assets and ETFs and everything. What we are waiting for on the US now is just more regulatory clarity. We've had, the Genius Act pass, and now going towards Asia and the Middle East is where it starts to get very interesting. I personally manage, most of our client base is based in Pakistan, and we just recently got given the green light by the government to go ahead and, having Pakistani citizens are able to now invest into the digital asset space. And for a long time, it was a very high volume, widely used P2P market, which is unsafe and also completely unregulated. So there were people making tons of losses as well. And everyone wanted a vehicle to invest with. So I think if we take a look at just the subcontinent region, there is so much advancements going on there in terms of regulation and framework and implementation of that regulation now. And there's a lot of liquid there waiting on the sidelines to enter the space, institutionally as well as personally. And now the Middle East is also a very interesting market, just purely because I feel a lot of the Middle East opportunity will come into play once we have more clarity on Sharia compliant funds. And I think that will be a big, big game changer for that region especially.
And I would like also to give you a brief answer. I talked to a lot of politicians, I talked to the EU Commission and so on, and I know they are quite conservative with their views on crypto. They think there's a lot of speculation. they say that's short-termism. They want long-termism, they want long-term investing, and they want to have an effect on the economy and so on. And so they don't understand the technology. They think that it's an intransparent market, and things like happened last week also don't help really to make them more trustful in this. And that's what we as lobbyists have to do, and to talk to the politicians, to the ministries and so on, and to explain and to see that, and to explain that the markets work and that it's beneficial. So I think we have really only a few seconds left. Is there another question here from the audience? Otherwise,
from my side.
Okay, yes.
Thank you so much. A really great panel. Two simple questions to the panel. Do you think Donald Trump crypto politics empowers the institutional interest in crypto assets? And at the same time, do you think Donald Trump can also destroy the interest of the institutional perspective in crypto assets in long term? Or
Yes
is
and
it-
yes.
Okay.
For me, yes and yes.
Yes and yes, definitely.
We have not reached a new maturity or something like this. In the
Oh yeah,
crypto
I think the administration has done a lot for the space. Now they also have the potential to destroy a lot. So far, I think they've done a lot of positive, but we still have 3 more years to go.
You know, I'll finish off with this. There's a saying, I don't know if you know about it, but with great power comes great responsibility. Have you heard that one? I
Spider-Man.
think that summarizes where Trump stands in terms of the crypto space. He can go on to continue to do great things in the space, but just like my colleague said, he also has the power to do some serious, serious damage. So I would say keep an eye on the space and let's see how it goes.
And this gives also a chance to Europe to succeed.
That's a good note to end on. Thank you guys very much.
Yes, thank you very much to the panelists.
Big applause for everybody. Thank you.